What's going on, everybody? Cullen, Gandy here, coming at you in 2022 to help advise you prospective mortgage loan originators, as well as some of you current MLOs, as to what you should be doing and seeing going into the new year here in 2022. Because let's face it, we could be headed into a bearish market. A lot of markets are getting really spooked right now because of the idea of rising interest rates, which the Fed said it will be rolling out over a continual basis here in 2022. That is why you're often seeing some of these major meme stocks like Tesla going down 9%. And with all of this craziness going on, you got to think to yourself, how do I sell mortgages in an atmosphere where maybe people aren't spending the kind of money or refinancing with the kind of enthusiasm that they were in 2020 or even 2021. So here's some of the things you should be doing if you're trying to sling mortgages in 2022. Brace for it, knuckle up, folks. It's gonna be a wild ride. With the advent of the rising interest rates that I just had mentioned, a lot of folks, like I said, anticipate that lending is going to get a little more sluggish, and you might see some of your former clients get a little more sheepish when it comes to refinancing deals, especially as we know the refinance boom pretty much dead at this point. It's not dead, but it's not live. It's like on, I don't know, life support or something. People are refinancing, but you know, in the grand scheme of things, when we're talking about 2.5% interest rates, yeah, you're not going to be seeing that for a while again. So if you are a new MLO or somebody who is thinking about getting into the business because we were seeing these rock bottom rates and you think it would just be like handing out candy at a, I don't know, like a preschool or something, think again. You know, par rates are raising themselves a little bit, but in the grand scheme of things, I mean, hey, you know, I mean, we're still enjoying a really favorable interest rate atmosphere as mortgage loan originators. The main thing is people's assets are going to be taking a hit in this early period of 2022 especially. This is due to, you know, the rising interest rates again, but also prospective things like you know, equities dropping. People aren't going to have assets that are going to be valued as much as they were. And this is because of what a lot of people call the everything bubble. You see, when you have almost a decade of what's called quantitative easing, or, you know, pretty much free money for lending or free money for people who want to make big risks and take in big returns, that tends to drive up inflation. And so in order to hedge the inflation, obviously you're going to have to raise those rates. And that in conjunction with some tense atmospheres in the eastern part of the European continent could spell out a pretty grim early term for the high yield refinance market. So if you're working for those really big online lenders, you're gonna wanna stay resilient. These are the times that you're gonna wanna reach out with your networks, with your realtor partners, and really establish that base, because this is where that's going to pay off. Now, if you are somebody who is considering changing careers and wants to know whether or not there's value here for you, I will never say that there's not value here in the finance market around mortgages. Everybody's always going to need a home, and if they need a home, they're always, more often than not, going to need to finance that home. And that's where you come in. And if you're good enough to sell people, if you're good enough to keep on top of people, you can make some good money in this industry, even on the down times. If you're somebody like that and you're wondering, you know, what does it take to get licensed? How do I take the test? How do I study for the test? How do I interact with the NMLS? And finally, how do I get hooked up with a company and sponsored? You're going to want to check out this video that I did last year that sort of goes into a little more detail about what all is involved with that test and how you get hooked up with that company. But if you want to see some early yield commissions in 2022, these are the things that you need to do to really try to hone in on that. When you're making your calls and when you're reaching out to your cold prospective clients, you're going to want to emphasize one of two things, right? One, we've got the person who is making a purchase of a home. Now, as we know, there is a great sort of resignation going on where people are resigning if they're not getting the right types of terms, they don't think they're getting the pay that they deserve, and they've realized that their labor is actually more valuable than the employer really expected them to realize. So people are making career moves, man. They're moving up. They're moving from city to city, right? They're moving from state to state. These are people that are on the move, right? And if you're on the move, you're gonna need a place to stay. Purchase business is going to be there. Now, The only thing is when it is there, you have to make the sale on you as the mortgage loan originator. Because other more established mortgage loan originators, they're already going to be connected to their network in their community or their little pipeline. So you're going to have to be proactive about talking to those people, because the people that are really looking, they'll close on it. Just keep yourself top of mind and focus on your early purchase game. If you're not really sure how to, process a purchase on your very first couple of deals, maybe you should just get hooked up with some of these mortgage loan originators in your company, or perhaps it's your broker that you work with, and really just sort of shadow them. I mean, you could use this as an opportunity to sort of apprentice yourself with somebody who's a little more established, so that when you can pull the trigger, you can do it without any problems, without any processing errors, and most importantly, without any closing errors. On the other side of the purchase community, you have buyers and sellers and all of this, but you also have the folks that are on Zillow and they're just sort of making wishes in a figurative wishing well. They're like, oh, I want to buy that $700,000, duplex in Chicago, but I make $35,000 a year kind of person, right? Those people, for whatever reason, they're real good about being motivated to reach out to you and to waste your time. Or on the other side of that, you have folks that just ate up with money and they just want to waste your time too by seeing if they can get whatever kind of deal that they can get out of you and try to leverage it against other deals constantly until you're just basically tired out. Well, this is the sort of period that you can sort of keep checking in with people a little bit more often and a little bit more consistently than you would otherwise give them time of the day for, right? So if you got some tire kickers, hey, just send out some correspondence every now and again. And if they try to run you through the mill, just give them a little bit of your time, right? Because we're going to have a little bit more time. Less clients equals more time to be productive on each individual client, and especially if it's a purchase client, those mean big commissions, guys. So even if you can convert, 10, 20% of these sort of tire kickers. I mean, if you're in a major metropolitan area like Chicago and it's a $700,000 house and somebody decides to pull the trigger, I mean, that's a $7,000 commission if you're getting 100 basis points. So this is the time where you can keep checking in with people. Don't let people tie you up. If you've got active business in your pipeline, you just give them the rates, you sell them on what you can sell them, and you say, hey, look, when you're ready, pull the trigger, I'm gonna be here for you, and send out the loan estimate. Now, with the declining value of certain assets in the short and medium term in this kind of bear market, as you're seeing in some of the bigger meme stocks, as I was saying, like Tesla, and also the tech stocks like Microsoft and Apple and Google, you are going to be seeing some of these people, and these are generally more affluent people, they're going to be considering liquidating some of their equity in their homes to make some plays in the market, which could be, high risk, high reward scenarios. In this case, these are people that usually own properties and want to refinance them, but unlike in the refinance boom, where most of Americans were trying to refinance with a net tangible benefit, or basically the greatest good of the refinance, they want that net tangible benefit usually to be a lower interest rate, right? These folks are going to be refinancing their home and cashing out equity from their home in transactions where they're going to be able to get money out of it. This is also going to be for people who are hard up for cash and just need the cash in general. Maybe their business didn't take a good turn this year and they need to be able to meet their obligations. Well, the equity is sitting there, and you can definitely sell these refinances to these people in these situations, especially since the process for the refinance is so much simpler, or at least a lot less pressure than the purchase client, and it's a quicker return. But what are you going to be saying to these people when you're having a hard time actually selling them on a refinance or on a purchase in an atmosphere of uncertainty? Well, if you're looking at a client who's trying to do a cash out refinance but doesn't know if it's worth it, you can remind people that rates historically are still some of the lowest we've ever seen in history, right? In the early 90s and the late 80s, we were talking about interest rates in the double digits. It wasn't that long ago. I mean, I guess it was long ago, but it doesn't seem like it if you're 36. But, rates are still unprecedentedly low in the history of the American economy. And even though we do have mostly sky high or, maximum value real estate costs in most cities in the union right now, you can still sell them on the idea that, look, even though the rates aren't the lowest that they've ever been, they're still exceptionally low, and you can juxtapose or put together. These are the total interest paid payments that you're going to be making on a 3.5% or a 3.25% refinance or whatever the interest rate ends up being. And then juxtapose with what those would have been 5, 10, 15 years ago, even with the valuations of homes being less. It's a staggering amount of money. It's a staggering amount of money less that they're paying in total interest paid, or TIP. That's a pretty good way of getting rid of the doubts of the purchase client as well. A lot of times they're going to be worried about the sky-high price of the real estate in it of itself, but every now and again you'll get them kicked down. Oh, we're not going to see 2.75 with no fees anymore, or 2.5. Just tell them, hey, look, 3.5, even 3.75. I mean, these interest rates are still some of the lowest we've seen in history. And if you're going to make a purchase, even on a a $500,000 home that was $300,000 last year, chances are you're probably going to pay less on the total interest paid. Another big flashpoint question that a lot of clients and a lot of even realtor partners are going to be asking is there a crash coming in the rate market and in the real estate market? Are people going to regret getting this house or getting this interest rate? The FHA felt confident enough to raise the loan limits for houses in most areas to $420,680, which is a very, very high amount of money. And in particularly expensive areas, they're changing it so that the limit is $970,800. That's on an FHA loan. So if the FHA is fairly confident that the home's value is going to stay relatively constant throughout the next 4 or 5 years, chances are, you can project enough confidence to get that sale going. Plus, people are just going to be psyched that they're going to have access to FHA loans, 3.5% down, even if they're a first-time home buyer. $421,000 as a first-time home buyer, that opens up a lot of doors for a lot of people. With the Great Resignation and the big reevaluation of the worth of labor, especially in markets with high education-based labor, like software engineering and marketing and all these things, people are getting paid a lot more, or at least relatively a lot more. But you got to remember, some of that is going to be eaten up by inflation, and the best hedge that you can put against inflation are hard, illiquid, non-fungible assets. And no, I'm not talking about NFTs, I'm talking about real estate, right? And the best way to get real estate? Finance real estate, folks. Debt really is worth a lot more when you have it secured against real estate, especially in a high, what are we looking at, like 6.4% inflation in the first couple of months for 2022, and wages, they're only rising about 4.8%. So they are rising. I mean, you are seeing the benefit there, but you don't want to be the one holding your cash when your cash is worth 6.8 or 6.9 or 7% less by the end of 2022. But if I need to hammer one point down for all you new guys and all you guys that might be struggling right now as a mortgage loan originator or as a broker, it should just be to focus on stability, on the long game, keeping things consistent. Because even if you aren't making, the best absolute commissions of your career, if you stick to it, if you stay consistent, if you're making the calls and checking in with your partners, you're going to make a wage that's still way above the national average, and you're still going to be making a fairly good wage even as a new mortgage loan originator. I mean, you can go into this game and still make $60,000, $65,000 a year. And that's a game-changing amount of money when you don't know where your next check is coming from. So what about you? Are you guys considering changing over from a different career? You think that the money could be a little bit more lucrative on this side of the table? Well, let me know in the comments below. And also let me know if you have any ideas or questions that you want me to address in future videos. And as always, if you liked this video, go ahead and give me that thumbs up. You know I love it. And subscribe and comment and all that good stuff. Oh, my dog is barking at me. But until then, I will see you in the next one, hopefully a little bit happier and a little bit richer. Ciao, guys.